Good morning, everybody. How is everybody doing on this fantastic Tuesday morning? If you are new to the channel, welcome. Welcome. Here you will see that we go over technical analysis. We use price action. Here I am trying to teach you the way that I analyze price for the most consistent and higher probable entries to help you guys become better traders. Good morning, everybody. Hopefully the internet connection thing is done, as I did go and get something new from Verizon. We'll try that out for a little while, see how it works. So far, looks pretty good. So let's get started. Right here you can see on the DXY, I do have some sort of a little bull flag thingy drawn out. There was a small little trend line right here that pinged off of two tops. You can see yesterday we did close above that, so we were wanting to see if this breakout was going to continue. And you can see today that you are back under it. And if you take out yesterday's low, then you will confirm a bull trap or a false breakout on the dollar. If we go in here to intraday price action, you're going to see that the dollar was trading really crazy for the last 2, 3, 4 hours. Right here, broke down, then you broke right back up and took out resistance. And then this hour, you smoked that high and straight down for a new low of day. And this right here is going to be yesterday's bullish candles low. So we'll see how that works. A weak dollar can absolutely help Bitcoin continue on with its breakout. You can see that now, since this thing is breaking down, you are getting a slight push on the Bitcoin. Not a whole lot, right? This doesn't have a massive big bullish candle like you see on the dollar, but it can help with its strength. We go over here to Bitcoin. You're going to see that you did take out that yearly open. That's what we wanted to see. That was our near-term target. We entered the trade down here on this support zone, and we've been bullish for like 6 or 7 days since. So obviously I wasn't the only one that was looking there for that entry. So what are we going to do now? Well, here's the thing. You broke out of this area. So this is what I wanted to see. And I do want to see bullish continuation up through here. Currently, you are setting at daily resistance. We go over here to the weekly time frame. You're going to see that there is nothing here on the weekly that will stall price. So it is just that daily. Last week's candle, which closed this Sunday, nice, big, strong close, closing above the yearly open, or above those liquidation highs. Let's go get the yearly open just so we can see if we did indeed close above that yearly open on the weekly. Yes, you did. So there is your yearly open at 46,205. Nice weekly close above it. So yeah, that's what we wanted to see for bullish continuation. Here is your 2-week candle. You closed this as well. Now this is different. You did close above the yearly open, and you did close above this last support zone. So if I pull this yearly open line over here to the old support, since you broke down below this support level right here on this candle, since that happened, you have not closed a weekly candle above all of this stuff, right? So for all of 2021, you have been trading underneath the yearly open once this occurred. So that's, that's on January. If you look down at the bottom of the screen, you'll see January the 3rd. So this occurred. That's the breakdown from the yearly opening range. And then all year, you've been trading under it until the close on Sunday. So yeah, we're going to be looking for this. I am going to pull this out just a little bit here and bring up the 21 exponential moving average, as it is kind of important to show you. So I did a tweet yesterday saying that there has been a few times in Bitcoin's history, and I just used this section of price, where you were bearish and closing below the 21 exponential moving average, and then got a bullish breakout above. Now this is a 2-week time frame, so that means this candle, since it just closed on Sunday, you got not next Sunday, but the Sunday after, before you will have another closure. So what we do not want to see on that is this. Now we probably will not, since we are already trading higher. We have already opened the new 2-week range, or the new 2-week candle, and we are pushing higher. So that pretty much isn't what we're looking for to happen, but it can happen. right? Traps exist. And we have to be cautious about that. Now, you could still, look for bullish entries, right? Because you are breaking out. And there were a lot of bullish factors that we were looking at in Saturday's upload. So technically, one could absolutely be looking for bullish entries. You're above the 21 exponential moving average on a daily time frame. You're above the 50 on the RSI on the daily time frame. And those are two key components when looking for near-term directional trades, in my opinion. And since you are above both of those, then yeah, you want to look for support. You do not want to be buying on big bullish pushes. You want to wait for support. Here's another time where we got down here and traded around it a little bit, closed below it. This was a section that was difficult trading. Obviously, the Wu flu happened, and that's what this is from. So, just keep that in mind. So this is what we had over here the last time, or the first time we had a 50% drop on Bitcoin. You traded underneath that 21 exponential moving average for a period of 6 or 8 weeks. 2, 4, 6, 8. So yeah, it's 8 weeks you traded under it before finally breaking out, going up, liquidating the old all-time high, and then pulling back under it. So you can definitely see that it was acting as resistance that sets real close to the yearly open. So that's good, right? That's what we want to see. Big, strong close on this 2-week candle. So we're going to treat it like it wants to find continuation. There's going to be your 2-week resistance level. All right, 2-week resistance level is going to be right there. So yeah, let's see what it does. Back over here on the daily, same thing. Looks good. You're testing that daily resistance level. So let it pull back. Let it find support. Let it see if it wants to trade above the yearly opening range. That's going to be crucial, as falling back below it isn't necessarily going to be a bullish signal right off the bat. We need to see a strong rejection for this bear flag to continue. All right. And the bear flag I am speaking of, if you have not seen it, is this baby right here. Let's just go get the trend line. Boom. Boom. There. And then obviously on the bottom here and here. So for anybody saying that the breakout has, or the bear flag has been confirmed as broken, they are clearly wrong. There is no breakout above the bear flag just yet. Now here's the thing though. This pattern is getting long in the tooth, right? I typically, when I'm looking at a bear flag as a pattern, which I don't trade patterns, but I will analyze them and look at them and identify them, and also identify when they are busted if the pattern is no good. So basically, I do not want to see the flag get bigger than like 1/3 the distance of the pole, because then you have something else going on, a channel, so to speak. So yeah, I mean, as far as the bear flag being broken, or is this confirmed bullish? Well, there's a couple things that you can look at. On the macro, Bitcoin is extremely bullish. All right, Bitcoin has been bullish on the monthly. Yes, I call it a bear market because, let's be honest, in order for a monthly candle to get and close below your 21 exponential moving average, you're going to be near the bottom end of your bear market. Right? And that's been that way for Bitcoin's entire history. Anytime you did finally get that push below the monthly 21 exponential moving average, you can see that it was pretty much the bear market low. Here, once again, closed below, but that was the bear market low. On this chart, you don't have enough data to populate much further than that, but on the BLX index, it goes a little further. Obviously, but you can see here we never did close below it, and I knew we weren't below it. Looking for short side entries, the macro backdrop is bearish, right? It's bearish for risk markets, the macro backdrop. So basically, that means with all the turmoil in the world, with the dollar getting ready to raise interest rates, all that stuff, that's not typically what you want to see for a bull market, right? But you are getting a bounce off of that monthly 21 exponential moving average. We were looking at monthly support. I did post it on Twitter when we were down there at the beginning of this month. We were down here. I posted it on Twitter saying you are into monthly and weekly resistances right in here. So if you are looking to get long on Bitcoin, maybe here is where you would want to accumulate some stuff, right? And that was like all the way down here. So that monthly resistance, or apologies, support level has held, and Bitcoin is advancing. That is beautiful. That's what you want to see. So as far as the bear traps being broke out above, it's not quite happened yet, but the pattern is getting a little bit long in the tooth. So the way we're going to play this from here on out is we're going to watch that yearly open. We're going to see if Bitcoin has, like, say, the next 2-week candle. If you close a big red candle back into that 2-week level, or not 2-week level, sorry, back into that yearly open, then we're probably going to look for short side entries. If Bitcoin can maintain that yearly opening range, maintain bullish structure above that, then we're going to be bullish. It's as simple as that. We'll watch that yearly open. As you know, just because you're trading around it now does not mean that it is time to ignore it, right? Just because you're above it means absolutely nothing. There are multiple levels of resistance on the daily higher, but as far as moving averages, you are above. Well, now you've broke out above the 200, so you are above technically all of them. Let's just go ahead and put them on the chart here. I'll even pull up this old 377 just so you can see. Yeah, and the 377 is a simple moving average. All the rest are EMAs, exponentials. Now your 21, your 50, your 100, and the purple being the 200, you are above all of them. That's typically what you want to see for a market that's in recovery, right? A market that's in recovery, and this market is in recovery. Let's go over here and look at the SPX. Excuse me. Red Bull's coming back up. SPX trading around a very, very, very huge level right here. That is going to be daily res. This was going to be daily supply. We traded under it for a couple days once we got up here. Even took in and put this bear trap in, taking out daily support. So, yeah, everybody was looking for that to continue. And then the next day, bull break. So, basically, this was a bear trap, but it was first a bull trap. So, a bull trap turned into a bear trap. Boom. So, yeah, that little bit of area right there was difficult trading. But now that you are above it. So, basically, this is not right here. This is supposed to be here, but TradingView loves to move my lines. There. All right, let's take it off log, see what that does. Absolutely nothing. Awesome. All right, perfect. That's, so what we were looking at for the bear market, which, on the SPX, this was also something that we've been speaking of. You never got into bear market territory on this asset. Not ever did you even approach bear market territory. You were not even close. You were down 14%. You need to be down 20% before you can call the SPY or the Nasdaq a bear market. So you never got there on the SPY or the S&P 500. And not only that, we were watching this trend line here saying that if you were going to be looking to be bullish, if you do break out above this descending trend line here, then that does technically confirm a bullish breakout on a downtrending asset. And if you would have done that, watched that line when you got the breakout, the next day you got a flawless retest back into it for a support hit. That was support, and boom, you've been trading up ever since. So right now, the markets are looking exceedingly bullish, more so than they looked, let's just go ahead and say 2 weeks ago, right? A lot more than they looked 2 weeks ago. So everything is starting to change. And I think, this is you do have that confirmation of a bull trap right there on the DXY. So now that means people are going to be looking to get short on the dollar. Can this be another trap? Well, we just seen on the SPX that it does happen. So be very careful. But if you are looking for shorts on the DXY, you could probably find some near-term levels to watch. I don't know if I would take any there, but technically you're not going to be trading the DXY anyways. You're going to be trading the euro inversely. So if you're bearish on the dollar, you'll be bullish on the euro. And here's what the euro is doing. As you can clearly see, the euro is beating up that dollar weakness. All right, this looks pretty good. So we did have a little bit of what looked like was going to happen was this was going to roll over. We did get 2 days closure down here below support, but it was very difficult to take any decision or make any decisions on this just yet. because you weren't taking out any of the swing lows. So technically, if I see a breakdown below support, what I want to see is I want to see that bearishness continue, and I want to see targets hit. And there was no targets hit. So if you got short on this day and your target was the low of day, you might have hit targets intraday, but the next day you didn't get any follow through or continuation, right? The low is still intact, and then this day more than likely stopped you out. Excuse me. This day more than likely stopped anybody out that was looking for shorts. Then you did finally take out these swing lows. So we were wanting to see if this ended up being a liquidation rate or a liquidation break, and it was. There it was. That was the swing low. So that wick down below liquidates everybody and then closes green on the day. So your entry would have been intraday, but I don't trade the Asian or London session on FX. I only trade the New York session. And as of right now, it looks like the move on the euro has already happened. So probably won't be any trades to take on this today. But you can always watch your old resistance level here. If price gets back down there. Not today. I mean like a day or two from now. Like Thursday or Friday-ish. If you finally get up here and start to roll over. But you'll make new support zones and stuff like that. So we'll just keep an eye on it. But as far as looking for entries on this today, you don't have any. Pound dollar. All right, so the pound dollar has been a little bit weaker than the euro. Just for the last few days. This looked like it was going to be exceedingly bearish, right? Nice big strong bear move. Then you get a bull market push. It's not a bull market push, it's just a dead cat bounce. And then you're starting to see continuation. But if the dollar gets weak, we'll see if the pound continues or not. But it's a little bit early to tell. Today you're trading green, just barely. You are a doji, so if you are looking for bullish entries on the pound based on what the dollar's doing, you're going to want to go intraday and see where is your support level. So it looks like this is going to be it. It was a bear trap, but then it ended up not being one. So, I could consider watching that for potential support. And then this one over here, that one was definitely support before you got this break. So either two of these levels right here, as long as we're not closing an hourly candle below that, we may be able to look for the pound to turn around today. But you can clearly see that order flow is bearish, and it's been bearish for the last several days. So trying to catch a falling knife isn't something that I encourage or often do. But, we'll see what happens here. So let me see something here. Sorry, I'm getting distracted because it sounds like one of my cats is on the roof again. They like to get up there. Yeah, I mean, you're below the 21. You're below. All your moving averages are fanning out. So, I mean, technically, I would be wanting to, like take shorts on this. But I haven't been able to get anything going in FX for the last few weeks. It's been very, very slow going. I do want to look at euro pound for a brief moment. Where is it? I want let's do it like this. My Forex, where are you at? There you go. All right, so here's the euro versus the pound. You're into daily res right now, but I mean, you're breaking out bullishly, right? You're back above the 50 over here. So the last several times that you've been around the 50, it hasn't really acted like support or resistance. It did a couple times way back over here, but this section of price action, that 50 isn't really something where we look to take shorts unless it's leveled or unless it's coming into another level like support or demand zone or something like that. With the 50 cupulation, then you could potentially take entries based on something like that, but not just on the RSI itself. But what we look at when we're looking at the RSI is we want to see the momentum of the specific asset. So you can see that euro is starting to get momentous. A break above the 50 could indicate that you're going to see higher prices. Now, there is several resistance levels above where we currently have resistance. But this asset's been trending lower with this stab lower and then a new higher high. you do have what could be considered as a new higher high and a higher low, and you're getting that bullish continuation. So you may be on the edge or at the very beginning of a trend reversal on this asset. So as I'm not going to buy it into resistance, we can wait for this thing to get broken out, and then we can look for it to pull back in, find a support zone, and then potentially get long. It's been getting killed for a very long time, so maybe seeing the ends of this right soon. Your moving averages are all bearish on the weekly still, so keep that in mind. Also, you are breaking out above the 21 on the weekly time frame with this, so you're gonna need to see this thing close above weekly res Friday, and right there at 0.84036 is going to be your weekly res. So a weekly close above the weekly resistance as well as the weekly 21 exponential moving average would look great for bullish continuation. Over here, gold, just because we need to talk about it a little bit. With everything going on right now, gold is not going to be bullish, barring a World War III breakout, right? So we spoke about that once we did get this massive bullish pop. A few other macro things changed inside of everything. So investors will more than likely not look to be buyers of gold at these prices, and you are pulling back again this week. You can see here that you got above resistance and then you rolled over. So you essentially have a bull trap right up in here. So if you are looking for positions to take on gold, if you are trading CFDs, we cannot trade CFDs over here in America. If we want to take positions on gold and silver, we have to do it through the stock market. But the gold chart can tell you a little bit. So you haven't broken down below daily support yet, but it does look like you are trying to do so. So right here is going to be daily support. Yesterday you closed above it. Let's see what happens today. If you close below it today with bearish push, then you can look for potential pullbacks and in order to get short. If you don't believe that analysis or you think gold is going to go higher, then by all means wait for support to look for bullish entries. So down here is an old support level, right? We keep this on the chart because even though it was broken here, this was a trap. You broke down below support, but then you pushed up above it and you had that big pop. So we use the pre-existing or the level before the trap was set as that level. You can already view right there that it's been tested already. So that does confirm that will potentially be support if you are bullish on gold. But just make sure you're watching it down there. Let it trade down there for a day or so. Make sure you're not closing dailies below that level, because if you are, then your next area of support is back down to 1851 967. All right. But as far as the bullish backdrop on gold, not really going to happen. Interest rates getting rise and everything like that, it's gonna force people out of gold back into the dollar. And then finally USD JPY, and then we will I'll go over whatever you guys want me to look at. Look at that, not a frame dropped. It's fantastic. All right, so here we go. This thing's been getting absolutely smacked down. The reason for this is the BOJ is going to continue to cap their yields. Yield curve control, they're calling it QQE. This will hurt the yen, obviously. The reason for this is because interest rates are low on the yen, so they're the low, zero-ish, or even a little bit below. So that will entice investors to look to take positions against the yen with other currencies, as long as those currencies have interest rates higher than the yen. So if the yen's setting at 0% on their interest rate, something like the USD, especially with interest rates coming, we know that there's at least going to be 6 more this year. That makes the USD JPY very attractive for investors, for the carry trade alone, for that interest rate gap alone, as that generates positive alpha. If you just get long this asset, right, simply because the carry is positive because of the interest rates. All right, so that's why you've seen USD JPY just go absolutely bonkers Once you got above this resistance over here, it's just been straight bullish with just a couple bearish days in between. You are getting pretty severely extended on this asset, though. So are we going to get long? Probably not. Can it continue? Yes, it can. But we don't like to take trades or get long on assets, no matter the carry situation, right? That would suggest that we will see more bullishness, but that's pretty much been priced in since this breakout over here. Very, very, very huge breakout. We were watching this when this occurred. It just did not give us any entries, right? It just left. So we missed out on this even though we were looking for it, simply because of what I just said. We were looking for the carry trade. We were looking to get long this, and we absolutely missed it. And it sucks because this could have been another pound yen trade that I had last year, right? One of the biggest trades. It's a year maker, right? You get in a trend like this, you pretty much make your whole year on one simple trade. And that one was missed. So that is my fault. You are coming into resistance up here. You have another near-term resistance there, and then another even closer there. Now you are trading above this one. So we'll call this one resistance and see how this 2-week candle closes. What we're probably looking at today is I don't like shorting the markets when they get like this, as you know, obviously this thing is bullish AF, and I typically don't like to short bullish AF markets, but the dollar's getting killed right now. All right, so what I'm looking at is a potential short side entry on the USD JPY for today only. All right, just this is a today only scenario, because this thing is more than likely going to find support. So if you'd rather do that, then wait, let it find support, let it build that support in, and then you can take it from there. But right now the dollar is getting pummeled today and today only, and the Japanese yen is at a pretty let's just say pretty significant region where it could potentially, I don't want emerging markets. I don't even know why I have that there. There's nothing in that. Where is it? Just bear with me. Right here it is. So this is going to be the Japanese yen futures index. Let me pull this out here. You can see that you are damn near at like long-term lows, right? This is your all-time low on this asset. And that's even if you look at this versus any other pair. Your yen's low is down there. So you're coming into another massive, nasty swing low. And this thing is stretched out to the downside. 1, 2, 3, 4 weeks of solid getting beat down. So what we're looking at potentially today and today only is, since yesterday had that nastiness, maybe this thing gets about a strength today or for the next day or two. And if so, and the dollar's getting beat down, then I think you could potentially look to take that short USD JPY. But like I said, that is only for a day trade. I would not be looking for a big trend to start off of that asset unless the Japanese yen starts to raise interest rates or something insane like that. All right, but that's pretty much all I had today. Today's just a test stream, essentially, see how everything works with the new modem. So far, everything looks good. I can't get the bit rate where I want it just yet, but that will happen in due time. As long as it can hold a stream, I'm good with it. So let's answer some questions. Oh man, I've been hanging on for this session. Thank you for being here, fella 10. I appreciate it, my friend. Hello, everybody. Good morning, good morning, good morning. I know it's morning to you all, but it's night here, and I have my bourbon and notepad ready to go. Man, that's the way I like it. Do it myself. Just chill back, get your drink, kick your feet back, relax. Good morning, fam. Good morning, Ajit. Thank you, my friend. Hey, Heath, can we check Tesla and Amazon, please? Yeah, let's go take a look at them real quick. TSLA. Tesla obviously had a stock split again, or he's talking about it. Crazy ass. Up in the $1,000 region. He's trying to get it cheap enough for individual investors to get involved. So what you see here is similar to what you see on the SPY, right? Excuse me. The S&P 500. yeah, that bullish pop. Tesla's a big part of the SPX. It's a big part of it. It has a big position in the Teslas. So, if the SPY is brute force doing a bullish breakout, then Tesla's sure to follow. And that's exactly what's going on right now, right? Now, Tesla did get into bear market territory, but this thing is very volatile. Very, very volatile. Yeah, at one point in time, you opened at 43% off the high. So, yeah, definitely was in bear market territory with this. But you have regained almost all of it in just a few short weeks. So let's see where we're sitting now. Now you're just sitting about 12% off the highs. Absolutely insane. Looks like it's wanting to go back to the moon like everything else. It's extremely, extremely concerning to me that all this is going on simply because the macro backdrop does not support a bull market, but price is king, all right? Price is always king. You do what price is doing. You do not let your biases and your opinions get in the way of that. You are above the 618 retracement. So the reason you're gapping up today is, or yesterday, apologies, this is yesterday's candle. Today, I don't know where you are. There's no pre-market indicator over here just yet. Excuse me 1 second. There you go. Yeah, so the reason you broke out with this big gap to the upside yesterday is because it was a short squeeze. So I would expect it to continue for another day or so. Yeah, I mean, this today when the market opens, I'd probably be bullish on Tesla. That is, of course, if it doesn't take out any major key areas. So what I mean by that is, well, since I don't know where price is pre-market yet, obviously 1065.10 is going to be an area where we want price to find support. So if it's trading above this and you get a 5-minute or 10, 15-minute push lower, as long as you cannot get back below that, then you could potentially look for bullish entries. Because a lot of people are going to trade this for the gap fill. But, it can absolutely keep rocking and rolling. It does not have to fill the gap. Technically, we look for it to occur, but doesn't mean it will on the next few days. So if you go into the intraday chart, you're going to see something like this, right? So yeah, there's that big boom. There's your gap up. This is where people are getting short at the 618 retracement of the main decline. So the 618 retracement of the main decline from your all-time high down to the lowest point of the downtrend. So everybody was getting short here. You can see that it held for 3 days before you got finally the break. So we'll look for this to continue a little bit more. Short squeezes generally will last for a few days. It's depending on how big the squeeze is, obviously. So yeah, that's what it looks like is going on there. So yeah, what I would do today is I would watch that 1065 spot 10 level. See if price can hold above that. If it does, I'd potentially be bullish on this thing. If you open way higher, like a new gap, then I'd probably leave it alone. All right. I mean, you're extended in the upwards direction. I do trade Tesla, but when I do trade it, I trade it with options because I do hold a few shares of this thing, and I've been holding them for years, and I don't want to destroy that cost basis. So, yeah, when I do trade it, I trade it with options. Probably not going to mess with it today. A lot of these things are getting extended and getting upwards into areas where shorts are looking for this to continue. So we got to be careful buying into overstretched markets, especially if they're into resistance. All right, and what was your other one? Amazon. Amazon looks almost identical. It's not up as high as Tesla is, but Tesla is one of those high flyers. And since it's got, stock split news out there, that's why that thing is doing a lot better. Well, I take that back. Amazon's only 10% off the highs. So, I mean, as far as what price looks like, guys, it looks like whatever was, if there was going to be a bear market, it is over. Your assets, your stocks and stuff like that, they're generally always bullish. You have to have some really crazy stuff going on in the world to cause these things to roll over. and be in a sustained bear market. We just didn't see that, right? So no matter if there is going to be interest rate hikes, no matter if there is going to be a war, price is bullish. It's bullish. I mean, look at this rip. That is a rip your face off rally. Let's see. From the lows down here, you're up 26% on Amazon from the lows. So, I mean, are you wanting to be a buyer up here? Wouldn't it have been better to be a buyer in the bear market? Always remember, when everybody sees blood on the streets, you got to look to be a buyer. You just got to find an asset that has support, right? Catching a falling knife is two different things. You don't look to be a buyer when this is going on, but now that you tested and made support and you're finding it, getting bounces, look at this bounce, boom. You could look to buy it then as you got your bullish reaction. And we want to see that at least some bulls are stepping up before we look to get long. But I don't suggest you get long here. You're into a massive area of resistance. Let's pull this line up here. You can see it there. I mean, multiple days. Day. Hold. Boom. Down. So 34.20.74 is potentially going to be a resistance area. And if you want, you can go ahead and pull up this here, see what we got. Yeah, I mean, you closed above your 618 retracement. So that's on the main decline. For bear market to continue, you would want to have seen this hold. And it still can. Let's be real clear here. Just because you're breaking out yesterday above the 618 retracement on a lot of these stocks, that does not mean that the bear market, or what was considered or potentially looking like a bear market, to be over. Traps exist. This thing could trade for a whole week above 618 retracement right in this area and then roll over. So that's another reason why I don't want to look to be a buyer up here. Not just yet. And I can't be a seller either until we at least get back under that. Okay, someone's telling me that I'm in log. Yeah, I know. It doesn't really affect the stocks or Forex charts that much. It more or less affects. You can see that there's not a whole lot of difference there. Maybe a few percents. But thank you for letting me know, V-Money. I appreciate it, my friend. But yeah, so let's see what happens if it wants to break back down below that 618 in the next couple days. Then we'll attack it to the short side. And there's a lot, you know what I mean? There's like a lot. There's not much support in this uptrend. There's a couple little areas right here where you would stutter step or find potential support. So we wouldn't want to short it there, but a breakdown and then a pullback into that region would be looked at with shorting opportunities. So just because we're above it right now doesn't mean anything. For just out of curiosity, I don't remember if I did this on the SPY. The SPX probably looks like you're not going to be there yet on it. Yep, you are. Yesterday. 2 days ago. Yeah, yesterday. Because this market trades 24/7 because it is the CFD. There's your 618. So the stock market looks pretty similar, right? We just looked at Tesla. We just looked at Amazon. Both of those assets just broke out above the 618 retracement. So if you're a bear on the stock market, if you think, World War III is coming and we're all going to be doomed and the bear market's here and it's here to stay, you want to see this reject in the next couple days. Want to see this start to reject in the next couple days. Right? If that occurs, then you can look to be bearish again. But as long as you're trading above that, man, to be honest with you, as long as you're trading above that, I was looking for bullish entries. That's a big thing, right? You're breaking out above your downtrend. So, yeah, there's daily res. Let's see if that holds. With dollar weakness, it's unlikely, right? Unlikely. D. Barry says, smash the like button. If you guys wouldn't mind, I would appreciate it. Heath, can you please check UNG for a medium term buy? UNG. What is UNG? United States Natural Gas Fund. I hope this is right. I hope you're not looking for a... Let's just type USD behind it. Yeah, no, perfect. All right, so USG, UNG, sorry. Did I read that right? UNG, yeah. So, it's not great. It's not great. I thought natural gas was going higher. To be fair, though, this is a long time. So since January 11th, that's last year, 2021. So over a year, you've been trending to the upwards direction. So, I mean, there's no reason to assume that that is over with. Let's see here. What are our trusty moving averages say? Remember, guys, I don't use moving averages to take trades off of. I use them just to see where they are situated against price. So, I mean, you're bullish. There's nothing else to say. You're in a bull. Can be considered a bull market. As long as you're above all this stuff, it's fanning out even. When they start to fan out like that, then, yeah, I mean, it's a pretty good indication that you're going to see more. So, I mean, I wouldn't suggest you buy it today. You're hitting oversold regions. You can actually, let's see if that is going to be looked at as divergence. It is not. Oh, yes, it is. Sorry. You have a higher high on price here. You have a lower high on your oscillator there. Boom. Boom. So you do have a little bit of divergence going on, but that could be enough to cause a pullback. So if I was going to look to be a buyer of this asset, the first area where I would even consider buying it would be there. Right? I mean, look at that. It's pretty close, huh? That's your old support from way over here. Well, it kind of sort of was holding again. So, like, I'd need price to pull back down into this, especially seeing how you're into resistance. Right there's resistance. You traded above it yesterday. You opened above it, pushed higher, then pushed lower, but retraced all the way back into that. You were still red on the day. And you can see pre-market or overnight, this thing gapped lower, traded up to close the gap, and then closed there. So it does look like you are starting to get that pullback. Right there would be demand. Let's bring this over here. That would be demand or a demand zone. So 1849 or 1803. Those are the first two places I would wait to be a buyer. I'm not looking to be a buyer until we get down to these two areas, and then I want to see how price reacts there. But yeah, that's about it. This thing is gappy as snot. This is something that you just wait for a pretty big pullback into support and just get long. It's difficult to trade it. Gapping around all over the place. Look, you had 3 red days in a row, then you gapped higher, pulled back. I mean, it's difficult. When you're opening and then going in the wrong direction, it makes it difficult to trade. There's a few things that's done that. Thanks to the S&P 500 getting a pop the last few days. But yeah, medium term, I would look to be a buyer around in there. If you're looking, more than longer term, you could pull back all the way down to there, like 1581, your old weekly support since you got the breakout. But near term, closer term, 1849, see if that holds the support. It's also about the midpoint range of last week's advance. Yeah, I like it. With all the interest rate hike about to come, how far do you feel the Nasdaq can go up in this rally? The early open was around 1513. Well, let's see here. I can't remember the ticker for the Nas. I know it's Nas1 or something. I typically only look at the SPX because I'm more or less involved in the stocks that are traded on that. But I can always go here and find it. There it is. All right. So this looks like it's pulling back into a region to be shorted again. This one is not nearly as strong as the SPY. Other things. How far can this rally go, you ask? I'm saying probably right about there. You could go higher, obviously, but I wouldn't be a buyer up here. because you're getting into that area where people are going to be looking to be a seller. Now, if you find intraday support lower, like down here, you could potentially look to get long because there is a bullish target right there. This would be a target as long as this thing doesn't roll over here. So it needs to hold support, and I mean this support. If you get lower than that, then I wouldn't be looking for that target anymore. So you're trading right into your 50% and 618 retracements of the main decline on this asset. Whereas SPY and everything else is above it, this is not. This is not. And this is the E-mini futures, so this is trading right now, or should be anyways. Yes, it is trading right now. So, yeah. You're into resistance. There's resistance. This would just be a bullish target if the bullish continuation occurs. But as far as this asset, it is weaker than the SPX because you're still below your 618 from the main decline. That's this entire decline here. And if I ain't mistaken, I think this one did get close to bear market, or closer than 14% off the highs. Yeah, this one did get into bear market territory. So technically on the Nasdaq, you can pretty much see this got down below 20%. This could be looked at as a dead cat bounce. Now, unfortunately, it's got a lot of steam coming out of there. So what you want to typically what you want to see on a dead cat bounce is a small, slow advance, then a resistance test, and boom. But this is something else. This is a flat out breakout to come screeching out of there like that, like a rocket ship. I would be a little bit more careful on looking for bearishness. But if you are bear, then this is about where you are starting to get interested in looking for positions on this. So what I would want to see if I was a bear is I would love, but I don't always get what I want. I would love to see this thing take out that bullish target, then reject. As that could provide enough liquidity to force it lower as well. So, I mean, it can roll over here. It doesn't have to do that. Nothing ever has to happen in the market. That's just speculation, conjecture. But yeah, I mean, keep an eye on it. It looks like it's coming to a pretty good area where shorts are going to get interested in this. Do we go up and say 1,500 or 15,000? Sorry, then have a small pullback. I mean, when you're doing that, yeah. Right, we just kind of spoke about it. It could go up there and then have a small pullback, but you're still under the 618 of the main decline. So that technically can still be looked at with bearish eyes, meaning people that are looking for shorts to short the market because they think that it's going to roll over, because they think that the bear market is here. This is where they're going to be looking to get short. If you get up above this wick, because it is pretty much your high in this sequence of price action, here's your low, high, then your lower low. So that's a significant swing high there. So there's a lot of stops sitting above that, a lot of short stops. So that means by getting above that, you're going to bring in demand in the form of buy stops. The stop losses are buy orders. So that brings in demand, and the market can choose to sell into that demand or buy into it. If you get above that and then break out like what Bitcoin is currently doing, then that looks more bullish than bearish, right? And you don't want to be a short. So it's like one of those things. It's right in an area where I can see the case for both being made. If you're bullish on it, you want to buy it lower. Anything under 14,000 looks like a good spot to be a buyer. But it's already happened. Now, if you get back down there, it's going to look like this is potentially a rejection because you still haven't made a new high yet, right? You broke this high and this one, but this one's still there. That one's still there. So that'd be more or less the target. Bitcoin's doing the same thing, right? This is the swing high we were looking for liquidations to occur. It happened. That brought in a significant amount of demand because of all the buy orders just sitting there. These swing highs and swing lows create higher buyers and lower sellers, and the market loves to go for those people. If you are a willing lower seller, the market loves to buy from you. I like to buy stuff cheaper as well. And if I'm a seller, I'd love to sell to higher buyers. So that's what you have to be, keep an eye on. So bringing in more demand, you can see how it affected this daily, right? Nice strong close, and you got a day of continuation out of it. You're getting more continuation today. A lot of demand there. That will take time for the market to chew through. If they're selling into that, this can continue to go higher or, whatever for a few more days, and then you would see something like blah, right? That's what we don't want to see. Because if we see that, then we're going to know that that demand was sold into instead of bought into. So we know we have demand down here because price traded out of it. But this will bring in, more demand. It's also supply in a sense that price traded away from it. But when you break out of an area, it brings in demand. You got breakout traders jumping all into this stuff as well. I mean, it just brings in a whole slew of new demand. And the market needs to chew through that. We need to see how the market responds to all this demand. Right? I'm not expecting this to continue lower, right? I was in the beginning, but I wanted to see just a peak above that and then a rejection. You didn't get that. So, I called a bear market, and in my opinion, it's still here, right? This thing isn't as strong as the SPY or anything else. If you bring your 618 retracement up here, you got a long way to go on Bitcoin before you're even at the midpoint of this main decline. So a lot of people want to say that you're bullish now. You're not. First and foremost, you haven't broken out of the bear flag yet. You have not done that. You are not even at the 50% retracement of the main decline. You are just above the 382. That's not bullish, right? This can be sold back into. Will it? I have no clue. That's why I want to see how it reacts in the next few days. If we get that big drop back down in the range, you bet your ass I'm going to be bearish. If it continues to hold that yearly open, if it continues to show that demand coming in at and above the yearly open, you bet your ass I'm going to be bullish. That's how I do this. I let price tell me what I'm going to do, right? Price is king. Around here, price is king. Good morning. Tesla talking about split too. Yeah, they brought that up yesterday bright and early. Yesterday morning, I think. Who was it? Just bear with me 1 second. I want to say it was Ray. But I don't want to give Ray credit unless he deserves it. Yeah, Ray broke the news at 6:28 a.m. yesterday morning from Benzinga. Tesla shares are trading higher after the company announced the board of directors has approved the management's proposal for an increase in the number of authorized shares of common stock in order to enable a stock split of the company's stock in the form of a stock dividend. Also, that's good news. Oh, Tesla's going to offer a dividend? That would be good news. Company also announced it plans to request shareholders' approval. So Mr. Ray broke that news at 6:30 yesterday morning. Yeah, Tesla's doing some things. Tesla's doing some things. Thank you for that, Ray. Ray's always killing it. Good morning, Alex. How are you, my friend? Tesla about to split. Yeah, Tesla's up. Is at 1091. So that's pre-market. I done forgot what levels I said to watch. Yeah, I mean, yeah, that's yesterday's close, 1091. Post-market. Gotcha. Thank you, sir. 80% money was printed in the last 2 years. Absolutely it was. A ton. Had to head to work. Thanks, bro. You're welcome, Carl. Have a great one. Thanks for the session. Have you touched on ETH USD today? No, I have not. I will go look at it right now. But this will be the last one. Let me see here. because it's pretty much the end of the comments. So that's good. We made it through every comment today. That's fantastic. Where you at, ETH? There you are. So ETH's little bear flaggy thing looked different, right? Not a pattern trader, guys. I am not a pattern trader because they're so subjective. I mean, technically I could do something like that, and then you broke out of it down here. You know what I mean? It's so subjective. That swing high there, you just broke out of it. That's why I was using it. But yeah, so ETH looks a little bit better as far as breaking out of that consolidation. Bitcoin's broken out of its consolidation too, but ETH is literally broken out of its pattern, whatever you want to call that. There was daily res. You broke out above it, or you're trying to break out above it today. Yesterday, you got above it, but closed back under it. You've made a new high today, so you took out yesterday's high, which is always good because that indicates bullish continuation, right? But you do have resistance here. So look where it closes today. Do we close above 33.73.64, or do we close back under it? Closing back under it wouldn't look so good. And as far as breaking out, I mean, like, you broke out of this swing high right there, but you did not break out of the other one right there. You broke out. Boom, nice. But you haven't broken out of this yet. You got to be closing above that in order to call that a breakout from that. But from the smaller near-term continuation, or sorry, accumulation, you have broken out of it. Have broken out of it. And if you didn't watch Saturday's video, I suggest you go watch it simply because I show you other metrics from Glassnode on-chain data that was showing that we were potentially looking for bullish continuation because people were buying it, right? That's all you need in a market for it to go higher is demand. You need people to accumulate their positions. And there's a couple metrics that I've shown from Glassnode that indicates that people are indeed doing that. Buying more to their existing wallet, adding to it. And that is exactly accumulation. So we were looking for this bounce. That's why we got long. We were expecting it. And it happened. So that's fantastic. This position is up huge right now. Up huge. I love it. I hope it goes higher because remember, I got long down here at 49.55, 40955. That was my entry. So all of this looks good for me. But I do want to see what happens at that. I do want to see if this is able to hold that and continue higher. And I'll keep the position on. We drop back down into there, then I'll probably close it and look for shorts. All right. Sorry. 11.12 pre-market. Yeah, I figured as much. Yeah, it's probably going to go higher. Happy Tuesday to you, Heath. Thanks for the stream. Love your perspective as always, and congrats on the smooth upload. Yeah, thank you, Jeremy. Appreciate it, man. Yeah, it feels good. It feels good, and I know that we probably don't have to worry about that much longer. And also, the email said in April I should be getting the dish, but they said last year it would be the end of last year, so I'm not holding my breath for it, but that would be fantastic also. All right, guys, you have a fantastic day. If you have any questions, drop them down in the comments section after YouTube gets done uploading this video, and I will answer them. Until next time, which will be Thursday morning, same time, same place. You guys make sure you trade safe, trade smart, and as always, happy trading, everybody.